Moving on with the second part of our project, how to treat or how to trade the apex of a contracting triangle. And while on the first part we were issuing here the theory and showing the theory of a contracting triangle and what the notion of an apex is, or what the apex represents, and of course how to trade support, how to find support and resistance based on the apex, it is time to have a classical example. Now our example on the Australian dollar US dollar 4 hour chart, as you can see here, starts with these highs, and if you take a polyline, this would be our contracting triangle. This would be wave A to the downside, then the B wave here or here, it doesn't really matter, I would say here would be the B wave, like this, B wave, then the C wave, then the D wave, and of course the E wave, and then the triangle is complete. Completed. Like any triangle, like any contracting triangle, it travels within the A and C and B and D trend line. So this would be wave A, this would be the B wave, this would be the C wave, of course the D wave to the upside, and the E wave here, A, B, C, D, E, and then the market is supposed to break higher out of this contracting triangle. So we take the A and C trend line and we measure it in here, so A and C trend line, and then of course the B to D trend line, and then we look for the apex of the triangle, for the apex, like this. It might be that the C wave actually is here, so this would be A, B, C, D, E, so it would be the C a bit bigger in order to respect all the rules of a contracting triangle. So this would be the C, like this. This would be the D, like this. And now we should look for the apex of a triangle, and basically projecting this line on the right side, like this, and this one on the right side as well, give us an area in which we should look for support or resistance every time a market, let me put this one here, every time the market comes and threatens that level. That is being called the apex of a triangle. So we should go and take a horizontal line. This is the apex, like this, and this area here, not necessarily this point 9240, but this area here, you take an area like this, this area projected on the right side should offer support and resistance every time market will come and try to test it. As you can see, it is exactly by the line. It goes with here a strong support. We are supposed, if you are short on this move to the downside, you are supposed not to be short anymore here until you see that the apex of a triangle or the support and resistance is being broken. So this would be a nice place to buy call options. This would be a nice place to go and buy call options. This would be a nice place again to go and buy call options, and by the time, depending on the time frame, depending on the expiration date, as this one still has 1, 2, almost 3 candles, so 8 hours, you may actually trade quite nicely on it. And after it is broken, on a retest, normally we should go and buy put options. So this was a nice place for buying put options as well. I think you got the picture. I think you got both the theory and the practicality of trading the apex of a contracting triangle. And again, I will end with the first thing that mentioned at the beginning of this mini educational series. The bigger the time frame, the stronger the support and resistance. The bigger the triangle, the stronger the support and resistance. Thank you for being here. Have a great day. Bye bye.